Hey everybody, Merry Christmas from Houston, Texas. This is Alan Brochstein from 420 Investor and New Cannabis Ventures, and I'm going to discuss the most important news for the cannabis industry this week as I preview our weekly newsletter from New Cannabis Ventures. So I always like to start off by talking about the market action, and it seems like every week it's been pretty much the same. Slight difference this week though. While we did make a new low on the global cannabis stock index, we ended the week with three straight rallies through Thursday to actually close up on the week. Of course, that's been quite rare. We're down a ton still year to date. Taking a look at some of the most important news as a reminder, most of the content we run consists of curated press releases, and those tend to be around financial reports. There were none of those this week, as well as M&A and capital raises. And so we did have 4 press releases that we published that made it to the newsletter, 2 on M&A and 2 on capital raises. So the first one was, maybe it was 3 actually. 3 on M&A. So the first one, we'll start off with the capital raise, and Key Investment Partners, which is a private investment manager, raised $30 million for a venture capital fund. So I thought that was important. We continue to see a lot of money pour into the space, not necessarily all the time into publicly traded cannabis companies, but into the industry in whole. Now the M&A was kind of active this week, which was maybe surprising given that we're nearing the end of the year and it was a holiday shortened week. The first one was Glass House Brands buying Plus Products. Plus Products had declared bankruptcy, basically, creditor protection up in Canada, and they are now selling themselves for $25.6 million to Glass House in California. California is where most of the revenue from Plus Products is generated. If you're not familiar with Plus Products, it's one of the leading brands for edibles out there. Kind of a sad story, actually. This is yet another example of a company that took on too much debt, and that debt was with Gotham, by the way. And it paid the price. It was struggling to get investors confident that it would be able to meet the repayment of that debt, decided to seek protection, and ended up inking a deal with Glass House to sell itself. Most of that money will go to paying back the debt holders, some to the equity holders. Not a pretty story. The second one was a deal that I really found compelling, and I've been talking about consolidation in Canada all year. This has been a big theme at New Cannabis Ventures in terms of our outlook. For example, Canopy Growth bought Supreme. There have been a lot of other examples of this year. The Canadian industry, very fragmented. And in fact, at 420 Investor, just last week, I issued a special report regarding other potential deals I expect ahead. And this acquisition by Organigram fit exactly into what I was talking about. And I think it's a great deal. Organigram is buying a relatively new LP based in Quebec called Laurentian Organics, and it's not for a lot of money. That company is generating EBITDA, so it was a pretty good multiple of both revenue and EBITDA, and it was a good strategic fit. Organigram's done a good job of growing its revenue recently, but it's still negative EBITDA. The company, we just interviewed Beena Goldenberg, the new CEO, recently, talked about that a few weeks ago, and the company is laser focused on becoming EBITDA positive by the end of this fiscal year, which ends in August. And this is certainly a step in the right direction. And it fits in with the idea, if you want to succeed in Canada, you're not going to do it on just mass market flower. It's too competitive. You've got to have premium flower or derivative products, extracts in this case. So I think this is a really good deal, and they're paying a combination of cash and stock It wasn't a huge deal in the scheme of things, but it met our criteria. The other deal was interesting. Planet 13 is buying Next Green Wave Holdings. Next Green Wave Holdings is a California operator, publicly traded. The purchase price at the time of the deal, which has collars on it, it's a stock-based deal. It worked out to be $71 million based on the way they announced it. It's a little bit less based on the current price of Planet 13. Planet 13 fell going into the deal, and consequently the deal price is a little bit lower, and the deal has collars on it as well. Now, one thing that we didn't report at New Cannabis Ventures, but I did talk about with my subscribers at 420 Investor, is that Next Green Wave was hit with litigation just before that deal was announced. So I shared my views about the likelihood of that deal closing not being 100%. So that was the news that we ran that was curated, press releases. We also run exclusive news. That news tends to be our interviews, market updates, as well as updates on our resources, including the indexes and our proprietary revenue tracker, which I'll have one of those this week. We ran 3 interviews this week, and we also had 2 market updates. The market updates that we published this week were on the Canadian retail cannabis market, which continues to grow, although this was it reached a record, but it was the slowest annual growth ever, 36%. Not so bad. The market's maturing, and it was a little bit ahead of expectations, at least according to Hi-Fire data. And unfortunately, Hi-Fire is looking for a pretty big decline in November. That was something that was actually discussed on a recent earnings call by Hexo, I believe. So that was the first market update. The second one was on Michigan, and things pretty much remain the same there. We're seeing robust growth in the adult use market and a retrenchment in the smaller medical market. Overall, sales for the combined market grew 66% in November, down about, I think about 6%, if I'm not mistaken, sequentially. Remember, November has one less day. It's kind of interesting. I looked back at November of 2021. There was a big sequential decline as well. So I'm not sure. Maybe that's college students going home for vacation. I don't know what it is. I'm just making that up. But so there is a little weird seasonal there, it appears, in Michigan. That's a problem with these new states. It's hard to tell. Another big takeaway in Michigan is that we continue to see falling flower prices as more supply comes onto the market. So the unit growth is a lot stronger than the dollar growth in that market. In fact, the price of flower continues to trend lower by about 49% compared to a year ago. That's similar to recent months. So those are the 2 market data pieces. And just to wrap up the content that made it to the newsletter, the remaining 3 were interviews, the first one of which was with a small company called Flourish Software. And there's been a lot of interest in software in the space. And this was interesting, perhaps most, because I love these stories about people who are working in regular non-cannabis type of jobs, and they see an opportunity in the cannabis space and they seize it. In this case, the CEO was working at Manhattan Associates, a supply chain company, and he's built a software company over the last few years focused on cannabis. So that was the first one, Flourish Software. The second one, I'm sure you're more familiar with, was with Kim Rivers of TrueLeaf. And this was our first time interviewing in a year. I'm not sure how we let that get away, but the timing of it was pretty good because they just closed, obviously, that Harvest acquisition. And I think the most interesting part of the interview, we asked her a question about, what's TrueLeaf doing to compete in more adult use states? And you can read the interview write-up that we did or listen to the whole interview as well. I think that was about 26 minutes. And then the final interview we did was continuing a trend, probably the biggest story of 2021, in fact, of all this capital, non-equity capital showing up in the cannabis space. And one of those providers is Polaris Equity Group. And we interviewed the CEO and the president there jointly. and talked about, kind of what makes this REIT different from others. And perhaps the most interesting part of that interview was not only why they're private, but why they're going to always be private. They have no interest in going public, and they explain why. Again, you can read the write-up where we kind of talk about that, or listen to the whole interview. So of course, on these weekly newsletters, this is also the one place on New Cannabis Ventures where we inject a little bit of editorial. And so each week we're trying to share just one piece of insight, maybe a story that people are missing, or to get a little bit perspective what's going to happen down the road. And this week we took that approach. This is New Cannabis Ventures. We don't take Christmas off. This is actually one of our longer feature pieces in our newsletters, perhaps ever. And what I wanted to talk about this week was Constellation and their investment in canopy growth. And a lot's been going on. I don't see a lot of people talking about this. If you recall, Constellation entered the cannabis industry through its initial stake of about 10% in canopy growth a little over 4 years ago. It was kind of a surprise at the time for the market. I coined the term green swan. Everybody's familiar with black swan, a negative event. So a green swan event is when something positive happens in the cannabis industry. And this was the first strategic investment into the space. And it was very exciting at the time. And I would characterize where we are today compared to 4 years ago as an absolute disaster. And the reason I'm bringing this up now, hey, it's Christmas. I don't want to rain on everyone's parade. We're supposed to be happy and everything. But there's some serious issues the Constellation's facing, and we talked about that in this piece. And so just the brief history is Constellation has invested about $5.5 billion Canadian into the company. And, I think everyone would conclude that it just has not lived up to its expectations. That part's easy. The company had all this cash infused into it, and it no longer has that cash. Its cash levels are about equal to its debt levels right now. So this has been because they've spent a lot of the cash on acquisitions that have not worked out, or they've just burned it through their operations. And so what we're left with right now is a situation where Constellation owns right now about 38% of the company. They have warrants that would allow it to own the majority of the company if they were to exercise them, but those warrants are about 4 times the current price or higher. So the first of the largest part of those warrants is about 4 times the current trading price. So they seem unlikely to be exercised, barring some big change over the next 22 months when they expire. So what's going to happen? What can Constellation do to address this problem? And it's a huge problem, because I think Constellation was right to be excited about the cannabis industry, but they bet on the wrong horse. And, we're seeing Tilray with their recent Medman deal, and Kronos Group with their stake in PharmaCann do some of the same things that Canopy's trying to do. And, Canopy has built, like Tilray as well, this non-cannabis business in the United States, including CBD, vaporizers, and other types of things. It's not enough. And if the switch isn't flipped in the United States that would allow a more instant move to be more aggressive in the United States, what's going to happen with Canopy stock over the next 22 months, at which point Constellation's warrants will expire? So I'm not going to give it all away. It's a really great read, I promised. But I offered a range of possibilities, and I honestly don't know what they're going to do. It was really just kind of to encourage everybody to give it more thought. So with that, I'll wrap it up and just wish everybody, it's our last, next time I talk to you, it'll be 2022. And let me end this video by wishing you the best in the year ahead. Take care. Happy New Year.